Hi folks, Lee Gettess here with the Market Sense for the week of September 1st, 2015. We will look at some charts that come from the Trade Navigator software. And our first chart is bonds. And as you can see, last week, bonds had a really negative week. Except in the big picture, it's not so terribly negative. They've rallied so hard that retracement isn't very much of the move up. And this week, they're kind of holding, let's call it, what should we call this? 154.24. That's the lower moving average there, and they're kind of just bopping either side of it. I mean, they'd have to get up here to 157.08 to be to the middle moving average, or they'd have to go to 152.04 to get to the projected low. They're just kind of in the middle. They could go to either of those areas. Along with the concerns about China, we also have the employment data this week, culminating with the monthly employment report on Friday, which seems to be a big deciding factor for the Fed in terms of whether they're going to actually raise rates or not at their next meeting. And so, the possibility is for them to be down here in the 148.15 area or up here in the 160 area. I mean, you can't rule any of that out. But after the big run up and a big outside week last week, not too surprising to see them just sort of hanging around the previous close here, not sure what to do. If they do anything, the first thing we're looking at is 157.08 up here and 152.04 down here. They may not actually trade either of those, but again, because of the employment data, they could go through anything. And if you think that was busy, how about this stock chart? This is the S&P 500, the E-mini, and you can see the last 2 weeks have virtually doubled what the previous 8 months had done. People get scared when fear hits them about the Chinese situation, and the situation in China. Oh boy, poor China. They may only grow at 7% this year, but they've been the linchpin carrying the whole global economy, if you believe the media. And so 7% isn't so good for them, and it scares people. There's a possibility that this is a good low. I mean, obviously last week went way down here to the 1825 area and blew up here, so that looked really good. But you would have liked to seen them hold around the 1950 area here if they were going to continue up, and they don't appear to be doing that. Also, the resistance target should have been around 2010, and they haven't come anywhere near that. In fact, they haven't taken out last week's high yet. So it leaves us with just the projected low here at 1880. If that doesn't hold, I don't think the previous low will hold either, although I will say it wouldn't be terribly shocking for them to make just a marginal new low, take this out by just a little bit and then turn back up again. That's very possible here also. But it's also possible they hold the 1875, 1880 area and turn back up from here again. Again, I think the focus this week is purely on the employment data. Everyone is afraid that the Fed will raise interest rates and the economy will get strangled out at the same time. So what's in that employment data is going to be huge in terms of helping the Fed decide if they're going to raise rates or not this month. And so I think that's what everybody's focused on. And, based on those numbers, they could do just about anything. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.